Hello and welcome to another episode of Evening Crypto with your boy, your host, the real Shaw 256. And tonight I've got a great one for you. I have to also begin by sort of throwing out there the fact that I've been gone for about a week or so. I was actually in a mini vacation out to Mexico. I went to Cabo for a few days. If you were following me on Instagram, then you caught wind of that short vacation. So it's been about a week since I, went and came and left, and it felt like an eternity actually, not being able to record videos or give you guys updates. Although if you again followed me on Instagram, then you would have known that I was away for for a little bit. And so now we're back. It did feel like a long time, longer than a week certainly. But I did come back with a lot of energy, a lot of just feeling recharged, and just a lot of ideas for this video. Although the piece of news that came out today from the Senate Chair, Mr. Powell himself, did spice things up even more, just because it gives us a little bit more to talk about tonight in recap. But tonight, we definitely want to talk about Mr. Chairman Powell, and what the latest coming out of the Fed is. So we'll get into that and discuss, and then we're going to get into the charts. I did do a little bit of research while I was away. I did take some time to read and sort of what should we call it? Do a little bit of research, do a little bit of reading, and just doing some introspect on Bitcoin. Looking at the past, sometimes as they say, you have to look at the past to kind of tell what the future might hold. And so tonight it's even though I've done this in this channel prior to today, I've talked about the macro trend of things, and it is a good idea to look back and in time and kind of draw from that what could possibly come forward in the future. And I do want to spend some time tonight going over that. And this is something that I usually tell you guys that I do consult with other traders and in different um, styles, or disciplines. Some people that I consult with like to do Elliott Wave. Some people like to do fractals, and some people also follow the EMAs. Like I do. So in this case, I did not. I did my own research, as I tell you guys to do as well. And so, like I said, I'm coming back with some new ideas and I guess some reinforced ideas about the whole macro trend and how we can definitely look back at things to kind of tell what might happen in the future. All right, so let's get into it. Um, let's do a quick recap. We're currently sitting at 221 billion for the entire market cap. Trading volumes right around 52.5 billion, and then BTC dominance has fallen to about 66.5% according to Coin Market Cap. But if we actually look at TradingView and their version of this, we're currently at 68.71, so it's a bit higher, right? A bit higher. Now, this sort of thing has got people hollering, hooting and hollering about, oh, it's alt season, it's here, it's definitely happening. Well, I've told you guys on this channel that I will not start to get into this sort of in tune with that until we hit about 60%. It is a huge barrier or a huge area of interest for a lot of people. 60% Bitcoin dominance in the market. And if we do dip down below that, then I do start to change my mind around, whether altcoin season is here. But right now, we have a lot of work to do for that to even happen, right? But there would be some benefactors if we do keep dipping in this Bitcoin dominance, as we do see here. I mean, from this point to this point, let's put a short measurement on it real quick here. From this point to this point is about 6.5% almost. And it's really nothing to get overly excited about, and you see a lot of people already coming out and just screaming to the world that alt season is here. I want to say be careful. Certainly, there's been plenty of moves to be had, plenty of trades to be had within the altcoins. But is that sustainable? That still remains to be seen, right? Or remains to be confirmed. So I just want to tell you, just be careful if you are trading. If you did get into some trades over the weekend when these things were pumping, then good for you, and hopefully you got some gains. But don't be greedy. Again, I've been telling you guys, don't be greedy. Make sure you take some profits on the way up. Okay. All right, so let's actually get into what we want to talk about today, which we'll start with the Fed Chair Powell signal balance sheet will grow soon after recent market turmoil, referring to the whole repo market, kind of going overboard. A couple of weeks ago, the central bank's vast security holdings, which it had been shrinking up until August, will soon expand again. So in Denver, the Federal Reserve Chair Jerome H. Powell said that Tuesday that the central bank would again begin expanding its portfolio of government-backed securities and continued to leave the door open to another interest rate cut for maybe later on this month. While policy is not on a preset course, Mr. Powell said the Fed will act as appropriate to support continued growth. Right. So the central bank has been saying for months that it will eventually need to expand its holdings again to keep an ample supply of banking reserves. That time is now upon us, Mr. Powell said again. He added that the Fed will soon announce measures to add to the supply of reserves over time. So last month, an obscure but important corner of financial markets, overnight purchase agreements made between banks and other financial institutions, saw a spike in interest rates that spilled into other market rates. It even briefly pushed the federal funds rate, the Fed's main policy tool, above its range. So the episode prompted the Federal Reserve Bank of New York to jump into the market and smooth things over. For the first time since the last financial crisis, many market observers have said that this might have been they could have avoided this move if simply just the central bank had kept a bigger balance sheet, right? So what this is basically is it's a failed attempt at constricting monetary policy. The markets were just not ready for quantitative tightening, which is what the Fed had resorted to, thinking and being overly confident in the economy and the state of the economy, as it did see some growth, to be fair, but I think it acted too quickly. We said it back at the beginning of the year when the Fed started tightening things, started to tighten fiscal policy, and it seemed like too much too soon, right? And now we're seeing the Fed take a step back and say and backpedal into quantitative easing, which means more printing of money, more purchase of debt, government issued debt, as if we didn't have enough debt already. And it just seems like they're trying to patch a big, huge, gaping hole with a band-aid, right? That's just not gonna, I don't think that's going to suffice. I don't want to sound like doomsday here, but it's definitely showing of the times we are in. The economy is still, pretty shaky, and these big guns over here are still trying to figure out what the hell is going on. They can't get their finger on it yet. So they're meddling with your economy and your fiscal policy to try and figure this crap out. Well, great for them, not so great for the citizens of this country. Anyway, let's get into the charts now. Let me know what you guys think of that down below. Let's discuss. Give me your thoughts. Let me know how you guys are feeling about this whole quantitative easing thing. Again, it debases the dollar and fiat currency, the dollar currency, which again hopefully will have people sort of fluctuate or flock over to a better type of economic sort of a vehicle, right? Which is what we talk about in this channel, and many other people talk about Bitcoin being sort of a hedge. We're still trying to figure that out as well. To be honest, in my opinion, we still haven't figured out if Bitcoin is going to act as a hedge, because it's never been tested, right? It is definitely on a course to be and to have its biggest test ever since the inception of Bitcoin. And we're still yet to see how it will react to a definite downturn in traditional markets economy. If certainly if a recession hits, that will be devastating for a lot of people, a lot of businesses, a lot of jobs, a lot of individuals working these jobs. During these times, a lot of people lose jobs and lose money. So it will be very interesting to see how Bitcoin reacts to all of that. Certainly, I am under the opinion that it will be hit. Bitcoin will suffer, and we should see lower prices in Bitcoin. But anyway, let's leave it there. Let's get into the charts, and again, make sure you leave your opinions down below, and let's talk about it. So let's get into the charts. And here's what I mean by all this reading and researching that I did over this past week when I was away. I listened to a few podcasts. I read some interesting articles, and what I gathered from all of it is the following. You know, it's always a great a great idea, and I cannot overstate this. It's always a great idea to look at the bigger picture, right? Because what we do in TA, and for a lot of the purpose of a lot of this is because we're doing a lot of day trades, a lot of shorter term trades. So we always like to look at what's been going on recently, right? This is the sort of the for day trading, we couldn't say that this is sort of the macro trend, right? Because we're entering and exiting on a pretty short time frame, right? So this could be said, and this could be thought of as the macro trend here. This formation that we've been in since June, right? But I mean, really, the macro trend, we really have to look back at know longer time frames. Let's scale back here to sort of third quarter of 2016, November 2016, right? And we do see a clear trend line of support, a rising trend line of support here since 2016, right? And so you can bet on the fact that this has been tested and has acted as support for a very long time. We do see a trend here happening, as well we see another line of resistance coming up here, and perfectly letting us know that there is on a certainly on a bigger scale on the real macro trend. Going back to 2016, about 3 years ago now, there we are forming sort of this symmetrical triangle on the big picture of things, right? And we've launched from this area of support all the way up to 20,000, back down to about 3,100, and then back up to about 14,000. So we have been touching upon these big ranges of this symmetrical triangle. So what we can draw from this, and this is something that I've been talking about in this channel. If you've been following long enough, you know that I have been talking about maybe coming down here to the 786 and finding a bounce here. But again, going back to just doing more research and trying to open up my horizons here within the TA side of things. you know I've kind of changed my mentality around it. I I'm thinking that maybe, just maybe, we can actually come back and retest this bottom line. What once sounded as doomsday and ultra bearish sort of scenario and conversation has, in my mind, has shifted a little bit. I want to say that this could actually be more of a possible move than I once thought in the past. Again, I would always tell you guys that given this sort of move and the measured move behind this here, all pointing down to about the 786, maybe a bit below. But I've told you guys that I'm not so sure that we're going to go far deep into past the 786 and back over, to previous lows. And I'm not saying that's going to happen, but certainly my mind is way more open than what it was before, in several weeks past, where that just seemed like the ultimate bear case, right? And I don't think that even if we come back and retest this prior low here, within this ascending line of support, I don't I don't think that we get, that would be doomsday type of scenario, and that we would be calling for, oh, I mean, this was a bear trap, huge bear trap, and we've never left the bear market, right? Even if we come back and retest sort of these ranges here around the low 4,000 range, still that wouldn't put me or make me think that we are back into a bear market, right? Because again, it's within this formation here, and we've seen Bitcoin do this plenty of times. I mean, within this formation, there's other trends that are formed, like the trend here. When we were back here trying to get out of this, this descending triangle here, we do see this line of resistance being tested several times, and then we break out of this formation to the downside, right? And then we saw it here again most recently. Let's take the same line. I don't want to get too convoluted here. And we were within this triangle again, and then we resolved to the downside, right? Not saying that this is going to happen, but I'm just trying to point out the similarities here, and that history does tend to repeat or rhyme with past facts. Let's just leave it at that. So within the macro trend, there's been a sort of midterm or short-term trends that have let us know that Bitcoin does like to act upon these sort of moves, and does definitely like to trade within these formations, right? Very obvious formations, these triangles. And it's going back to 2016, late 2016. I mean, it clearly is forming another one here, right? So it just leads me to the conclusion that there is plenty of downside still left within this formation. And if we come back and retest the low 4,000s, we shouldn't even start to get bearish. It's not until we break this ascending line of support that we would start to get ultra bearish. So if we do get back to 3,100, certainly that would be a break off of this formation, and 3,100 would definitely mean that we could definitely potentially revisit the 1,000 range, 2,000, maybe $1,000 range, within that, if we were to break down below it. Okay. But as of right now, I mean, I want to reassess, right? This is something that we usually do in this channel, and I tell you guys about this. Once we get to a certain point, and a measured move or something has happened, a decisive move has happened, then at those points, at those moments, we always look back and reassess and look at where we are, look at what's going on, and then make an assessment from there, and start to plot out our next moves, right? All right, so that is one of the biggest things that I wanted to bring to you guys tonight, as I return to reality, back to work, and back to traditional and traditional lifestyle, and the grind of things and all that good stuff, right? I wanted to bring you this, that I've talked about in the past, but certainly still felt like this would have been certainly the area where we would find a great bounce. And the slight shift again would be that, hey, there's definitely a possibility that we can actually come back down to the low 4,000s range and still not be too concerned about things, only after we break this bottom area of support. All right, so that is the macro trend. That is what I definitely want to leave you guys with tonight. Let's get into the shorter term analysis, the medium to short term analysis. and discuss that. So let me know what you guys think about what all that I just said. Let me know if you guys agree with me or disagree. If you think I'm crazy, if you think that's great, let me know either way, and leave it down in the YouTube comments. I would greatly appreciate that, guys. You guys would do me a great favor, because otherwise I have to keep up with all the different groups where this video is posted, and it just makes it a lot more difficult to keep up with all your comments. So if you do me that solid one, I would greatly appreciate it. Make my life a lot easier. All right, so let's look at more of the. And by the way, guys, that was a daily chart on Bitstamp, because Bitstamp does have a longer chart than Binance. I used the Bitstamp chart, so if you guys want to go back and redo your own chart, you guys can do that if you want to. But let's go back into our usual chart, which we use Binance for that. And let's look at the sort of the medium trend or the midterm trend of what is going on. Let's actually remove some of these tools. And again, it does look like Bitcoin is drawing another descending triangle here. Excuse me. So it does look like it's definitely building on within these ranges here, building another triangle, as Bitcoin definitely loves to do that, loves to play within these triangles. That bottom area being tested several times now. So it looks like, I mean, once we get about 75% to 80% filled within a certain formation, like it is looking like it's doing now, then we do see another move happening after that. So what do we see happening here? So once we break out of this formation here, it looks like we could be coming down to about 7,200. 72, 7,300, maybe even lower, right? But it is coming in confluence with the 618 here. This measured move here would be coming in confluence with the 618. So I mean, this certainly looks like it's something that could definitely happen once we get a little bit more filled. It looks like we still have a few more days to go on this, about a week or so. But for the time being, I do believe that you can count on this sort of formation to continue playing out. Another retest of this bottom area here around, call it about 7,800, and then we'll come back up again and retest. What is this? About 8,200, so on and so forth. I think, again, you can almost put your money on it. I mean, that's basically what you're doing if you're trading this market, and if you are trading this sort of smaller triangle here. And then we do see the measured move coming in here with influence at the 618. But eventually, to kind of coincide with the whole long-term analysis, it does look like we have a long way down right now. This yellow line represents the previous measured move off of this previous formation here, and again, that is very much still in play, which would also coincide with our longer term analysis we just did on Bitstamp, where this move would come in and lead us to what is this here? Lead us to the 786 around 5,400. Let's see, where's 5,400 coming in at? Right around this area down here. Let's actually put a box down here for the longer term of things. That would be the 786, but then certainly if we break down below it, there would be this again rising area of support where we should definitely expect to bounce there. We'll leave this here for the longer term and see what happens. See if this whole research actually was worth anything or actually helped with anything. So going back to this on the shorter term of things, it does look like once we get filled, we'll go back and retest 618, maybe form another triangle or whatever, and then come back and retest the 786. So at this point, even if we wick above the 0.5 here, or I should say, if we do get if we do get a wick and a close, a significant close above the 0.5 here at around 8,500, I do kind of start to change my mind. So that would be the next area of support. Let's see if we actually have the 200 in confluence there. Previously, it was sitting around 87.50. If we change our tools here to show our EMAs, let's see, where is the 200 coming in at? About 8,600, 86, almost 8,700. So I mean, certainly coming back down a bit and adjusting. So once if we're able to get above the 86, let's actually call it that, about $8,600. If we're able to get above this box, this blue box here, then I do start to get, start to change my mind around things, start to change my mind in regards to, what might happen. But at this point in time, based on everything that I just said, I do think there's opportunity here on the shorter terms and maybe some short scalps or day trades, before we actually break down below this formation and come back to revisit these lower prices. I don't think, again, because going back to this chart here, because it does look like it's been doing that, right? It's been playing the range, from top to bottom to top again. And certainly we could see it retest the bottom again. So again, based on that analysis, I do think that we are going to break down from here and we are going to head down. So, again, you could still benefit from some shorter trades here, but ultimately be careful, because in my opinion, I do think that we're going to go back and retest some lower areas in the near, midterm. Let's call it midterm of things, right? Because again, this sort of macro trend is going to hold a lot more weight than anything we can talk about on the shorter term, right? It doesn't matter the type of news that come out. Certainly, if we were to get the news from the SEC that a exchange traded fund, an ETF, were to be approved, certainly then that would be something that would definitely change the course of things, and we could definitely see Bitcoin escaping and just breaking out of this move here, right? But that is the one thing I look at to definitely make a change within a trend, right? That would be such a significant event that I would doubt if we didn't. I would doubt not breaking above this here and just going for ultimate higher highs and into maybe $50,000 territory. Now all these people that you hear, like John McAfee, saying that we're going to 50,000 by the end of 2020, all these things, all that bull crap that you hear within these markets, just try to tune those things out, because again, the market is going to do what it's going to do, right? I mean, we back in 2017 we hit 20,000. There was no real catalyst, or there was no real reason why we went back and corrected all the way to 31, except the fact that it's a market. It's going to act. It's going to correct. It's going to do its thing. It doesn't matter what the news is. It's just going to keep on doing what it's doing, right? And the only thing you can do is try to be on the right side of the price action. So if you started shorting here, great for you. You followed the trend all the way down to 31,000, and then we turned it around for a while. We're now, after retesting this top area of resistance, we're now on our way down. I mean, this is a very natural, process. It's a very natural, progress within the market. So, and I'm sure I'm going to catch some fire, going forward about this, but let's just wait and see. And maybe I'm wrong. Maybe all that researching and all that learning, what I thought was learning, might end up, biting me in the ass. But it's okay. It's all right. It's all further trying to further expand my knowledge. Try to further my sort of trading experience, my journey within the crypto markets, and we'll just have to wait and see, right? But again, I think the market is going to do its thing. Doesn't matter what the news is. So don't trade based on news. Don't trade based on events, except for an ETF. Other than that, just continue to not financial advice, but continue to look at this downward movement as the natural progression of the market and where we are at now. Once we get pretty filled within this formation, we're talking, let's see, about March or April. Are we talking March? Actually, no, we're talking July of 2020. Somewhere in there between May and July, maybe August of 2020. So about almost a year from now, we'll see this formation certainly playing out. And there's going to be plenty of opportunity to short and long this thing along the way. Once we get down to these areas and then come back and retest resistance and come back and retest support, there's going to be plenty of opportunities for you guys to, day trade, take some scalps, or even swing trade if you want to do that, right? Depending on the trader that you are. All right. So hopefully you guys are I'm getting your gears to turn. Hopefully this is bringing a different perspective and just a different angle from what you've been hearing and listening to on other channels, on crypto Twitter or Facebook or wherever you try to get your analysis from. Hopefully this rings a little bit differently than what everybody else is telling you, and that way you have just another weapon on your belt to to kind of look at things and assess, right? And just to cap it off, I do want to just talk briefly about Link, as Link has been actually outperforming pretty much almost anything else out there. I am a big fan of Chainlink. To be quite transparent, I am not holding any trades with Link currently at the moment. I do think that I lost out on this trade, and I do want to warn you guys and just tell you to be careful. Again, if you've already entered into this trade, definitely take some profits. Definitely watch out for a retracement or a correction. Certainly down here to where the 200 simple is coming in at, right around, what is that, 224, 225. Definitely there should be a correction coming in. This previous area of support here around the 0.5, we could potentially get a bounce, and that would tell us, that would tell us a lot, actually. If we get a bounce right around 244, 245, we could actually come back and retest this blue box here, this blue territory here. And actually, if we do get into that, I do think we actually get we might have continuation into this area here, right? So if we break this area, then this will be the next area. I'm going to leave that here for future reference. Again, I do think we're going to come back down and have a correction, a retest, certainly at 244, and then the 200 here at $2.25, $2.44 at the simple 200. So definitely be careful. Let me know if you guys did enter a trade within BNB on the shorter term of things. That's sort of where we're looking at. Again, I'm not in that trade, but that's give you some reference points. Let's look at Litecoin real quick. Not really. I mean, there's nothing to talk about here. Absolutely nothing. I mean, even shorter range than what Bitcoin is playing under. I mean, just very, very boring price action. I mean, there might be a scalp to take, but otherwise not much with that. We're just gonna have to wait until Bitcoin does play out its move before we can say anything happening. But I do think, again, these altcoins are going to continue to get hit because, again, Bitcoin is in my opinion, on a downward trend. You heard it here first, folks. It's on a downward trend. I do think we get continuation to the downside, which means that it's going to drag along everything in its path. And altcoins, again, are going to continue to be hit and are going to continue to see lower prices with some bounces along the way. All right. Again, if Bitcoin dominance falls to about 60 or under 60, let's call it 59%, from that point forward, I do think that altcoin, there might be an altcoin season. It might be short lived. It might be a temporary thing, but if we do get down to about 59% Bitcoin dominance, then certainly that would mean other things are to come. All right. So looking at ETH is having a better sort of a better response to recent price action. It is trading on the up and up, but again, it's forming sort of a bear flag, which would mean continuation to the downside, as we've been talking about this, in this channel, right? With the whole Bitcoin theory here. I want to look at ADA real quick. I mean, certainly did have a bounce a couple days ago, but then it sort of fizzled out. And it is also doing kind of like what Ethereum is doing, building sort of the bear flag. And we could definitely see this playing out and actually coming back down to revisit lower prices. All right. So just a reminder to be careful with when you're trading these markets. XLM just having sort of following on everything that Litecoin, Ethereum, Bitcoin, everybody's doing is sort of the same thing. So there's not much to talk about there. Just remember to keep taking profits on the way up. All right. Okay, guys, I think I'm going to leave it there. Thanks so much for joining. If you've been following the channel, I do greatly appreciate it. If you got something in exchange for your time, then I really hope that you did. And make sure you hit the like button and also hit the subscribe button if you haven't already. And also don't forget to hit the notification bell so that way you get the notifications whenever I put out these videos and updates. And again, just leave your comments down below. We'd love to chat it up with you guys. Let me know what you guys think of this video. All right. Thanks so much. We'll see you guys on the next one.